Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 1st, 2025, and we're diving into Thomson Reuters' first quarter earnings report for 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Thomson Reuters' performance, especially given the interesting developments in their Q1 2025 report.
Absolutely. Thomson Reuters has reported a steady start to the year. Let's delve into the details. Revenue and profitability overview. Let's start with the top line. Thomson Reuters reported total revenues of $1.9 billion for Q1 2025, marking a 1% increase from the previous year. John, can you elaborate on the revenue growth and profitability?
Certainly, the company saw a 6% organic revenue growth, driven by strong performance in its big three segments: legal professionals, corporates, and tax and accounting professionals. Operating profit also increased slightly to $563 million, and the adjusted EBITDA margin was 42.3%, indicating stable profitability despite some challenges in other areas.
Segment performance and strategic initiatives. John, let's talk about the performance of Thomson Reuters' key segments. How did they fare this quarter?
The big three segments performed well, with legal professionals generating $693 million in revenue, despite a 3% decline due to divestitures. Corporates saw a 9% organic revenue growth, and tax and accounting professionals reported an impressive 11% organic growth, bolstered by the SafeSend acquisition, which enhances their tax automation capabilities.
It seems like the acquisition strategy is paying off. How significant is the SafeSend acquisition for Thomson Reuters?
It's quite significant. The $600 million acquisition of SafeSend expands their tax automation capabilities, positioning them well in the tax and accounting sector, which is crucial for their long-term growth strategy.
EPS performance and analyst expectations. Now let's discuss the earnings per share. Thomson Reuters reported an adjusted EPS of $1.12, slightly above the forecast of $1.06 from four analysts. John, what does this tell us?
This is a positive indicator. The adjusted EPS of $1.12, which is a 1% increase from last year, shows that Thomson Reuters is managing its costs effectively and delivering value to shareholders, even in a challenging environment. Beating the analyst forecast is always a good sign of financial health.
Dividend increase and cash flow. Thomson Reuters has also announced a 10% increase in their annual dividend to $2.38. How does this reflect on their cash flow and shareholder value?
The dividend increase is a strong signal of confidence in their cash flow stability. With a free cash flow of $277 million and net cash from operations at $445 million, they are in a solid position to reward shareholders. This marks the 32nd consecutive year of dividend increases, underscoring their commitment to returning value to investors.
Future outlook and strategic focus. Looking ahead, Thomson Reuters has reaffirmed its 2025 outlook. What are the key targets and strategic focuses for the year?
They are targeting a 7% organic revenue growth and an adjusted EBITDA margin of approximately 39%. CEO Steve Hasker emphasized a balanced capital allocation approach, focusing on innovation and long-term value creation. This strategic focus on content-driven technology and AI positions them well for future growth.
Key takeaways. In summary, Thomson Reuters has delivered a solid start to 2025 with strong revenue growth, a slight beat on EPS expectations, and a significant dividend increase. John, any final thoughts on their investment prospects?
Thomson Reuters is well positioned for continued growth, with a strong focus on innovation and strategic acquisitions. Their consistent dividend policy and reaffirmed outlook make them an attractive option for investors seeking stability and growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Thomson Reuters' performance in the comments below.